So now is where we get into the actual finances. So I've split down our account balance into 4 different sections. There's a practice account, spending money, starter deposit, and primary deposit. Once again, this is all hypothetical and educational and is not meant as investment advice. This is all going to be to show how the sheet works, and you're going to need to figure out what's going to be best for you and what you can afford. If you need to, please do go see a registered financial advisor. Practice account. Your practice account deposit should be the same or similar to the spending money section below. Essentially, you are gearing yourself up for trading with real money and will be using an account that acts in the same way as a live account. So if you've ever demoed an account, whether it's a paper trading account or if it's actually a demo through a broker, you'll see they generally start you on $100,000. Now, that's not the starting place for the vast majority of people. So it's best to actually set that practice account to be relative to what we're going to use as our first actual real money deposit. I like to keep this something a lot more realistic and something that we could afford to lose. So this is once again going to be different for everyone, but let's say we want to set our practice account to $400. You can see it's already filled in the section below because these two should match up, and I'll explain why in a second. The next point is the target balance. So your target balance is the balance you must achieve before allowing yourself to move on to the next step. I put this in here so that you get used to trading with that money and you actually test out your strategies and make sure they work before you graduate on to the next financial level. So I'm going to put my target balance as $500. That shows me then I need to gain 25% of my account balance before I can move on to the next section. I've started with $400. I need to make another $100 from that $400 before I can move on to spending money. Spending money is your initial deposit amount. This is the first time you will be trading with real money and will be used to get you comfortable dealing with live trades. This money should be a relatively small amount that you can afford to lose without an impact to your personal finances. To minimize pressure, it's best to think of this deposit as an expense rather than an investment. So the reason I want the spending money deposit balance to be the same as the practice account is that you've got so used to dealing with the $400 value and gradually getting it up to $500. So if we went from a $400 and $500 account to immediately a $10,000 account, you'd probably be pretty overwhelmed and stressed. So the only difference between these two first stages will be that one of them is with fake money and one of them is real money. You're dealing with the same amount of money, so the type of trades and the returns you're getting on them should feel natural, should feel comfortable, and will get you completely comfortable with risking your own money. Moving on to starter deposit. Now, starter deposit is an optional area, but it's a highly recommended step. So let's say you've saved up and you are all excited because you want to put thousands of dollars into your account. Now, just like moving from the practice account to spending money, if you suddenly go from dealing with trades that are risking $4 to $5 and you put in thousands of dollars and suddenly your next trade is risking $100, you're probably going to feel a little bit panicked. So I like the starter deposit to kind of break this up. Let's put in a bigger figure, get used to larger amounts of risk and larger amounts of money, and then we'll get all in once we've confirmed that we're comfortable trading at that level. So starter deposit. Let's say for this one, we have an account balance of $500 by the time we're here. Let's put in a starter deposit of $1,000. That immediately brings our account balance to $1,500, meaning on a 1% risk strategy, we'd be risking $15 a trade as opposed to $5. Now this is where we manually type in our target balance. We're trading with $1,500. Our next step we want to get to, let's say we want to turn this $1,500 into $2,000 before investing anything else. That means we need to earn 33.33% of our account, another third of it. We're taking our $1,500, we need to make another $500 and turn it into $2,000. Once we have achieved $2,000, we get to move on to our primary deposit. The primary deposit is the first major deposit you make after achieving 3 levels of validation of a successful trading system. Once again, you must ensure this is money you can afford to lose. So looking at primary deposit, our current account balance is $2,000. So with our primary deposit, let's say we want to add another $4,000, which would bring our account balance to $6,000. Now I want to put in a target balance of $9,000, which means we need to gain another 50% of that. Don't get this wrong. This is going to take a while to get through all these steps. It's not a quick thing to earn 25% of your account or 33 or 50% of your account. These are mid to long-term goals, but you need to have these structures in place so you know what you're aiming for and you know what you can do when you get to these. So you may not have actually realized it, but through this process, we've outlined all of our goals and rules of when we're going to be trading. We've defined what we're going to be trading, how much we're going to risk per trade, our maximum exposure, our maximum drawdown, our drawdown break, and then all of our funding levels as well. So we've completed our trading plan, we've completed our risk management, and we have it all in one document. Make sure you keep this up to date and print one off to have it beside you so you can refer to it at all times.